Welcome to Tikona Capital FinServe's Market Outlook for January 2025. I'm excited to share our comprehensive analysis of the recent market correction, the emerging signs of recovery, and the strategic opportunities we see ahead. At Tikona Capital FinServe Private Limited, your investing co-pilot, we provide comprehensive wealth solutions for working professionals, HNI clients, and family offices. Our philosophy centers on creating finite solutions in an environment of infinite financial possibilities. Investments in securities are subject to market risks. Please read all documents carefully before investing. This presentation should not be considered as investment advice. Please consult your financial advisor before making investment decisions. Past performance does not guarantee future results. For information and detailed disclosures, visit our website at tikonacapital.com. Economy in 2024. Inflation cooled significantly across all major economies from their peaks 2 years prior, thanks to easing commodity prices, resolved supply chain issues, and successfully restrictive monetary policies. Global bond yields were volatile, but India's 10-year yield remained remarkably resilient, reflecting confidence in our domestic economy, while China's yields declined sharply amidst its own set of challenges. On the growth front, India cemented its position as the fastest-growing major economy last year, successfully navigating geopolitical tensions and a global slowdown. This strength was mirrored in the Purchasing Managers' Index, or PMI. While PMIs ran weak in other major economies, India's consistently stayed in the expansion zone, highlighting robust underlying economic momentum. The US economy is moderating but continues steady growth, fueled by strong private consumption and a normalizing labor market. Real household income and savings rates rose, boosting financial buffers. The services sector, in particular, showed robust growth. The outlook for this year is optimistic, driven by expectations of short-term boosts from anticipated tax cuts. However, potential tariffs and stricter immigration laws could negatively impact medium-term growth if implemented. China's economy struggled in the final quarter of last year, with industrial production and retail sales falling short of pre-pandemic averages. The housing sector remains a significant fragility. The outlook for this year is highly uncertain due to risks of significantly higher US tariffs and structural domestic challenges. With global resistance to its imports rising, China risks long-term stagnation unless it can successfully boost domestic consumption. Markets in 2024. Last year marked the 9th consecutive positive year for Indian equities. Sectorally, pharma and real estate outperformed, driven by affordability, the wealth effect, and government initiatives. Globally, US markets were the strongest, closely followed by a late surge in Chinese indices due to stimulus. In India, the mid-cap 150 Momentum 50 was the best-performing strategy. In the mutual fund space, mid-caps outperformed the broader market for the year, followed by small caps. Thematically, manufacturing was the best-performing category, capturing the China Plus One narrative. In debt, long duration and gilt funds gave solid returns, anticipating rate cuts. Among hybrids, domestic equity-focused funds led the pack. Market activity last year was a story of domestic resilience versus global caution. Foreign institutional investors were net sellers for the year. However, domestic institutional investors continued their relentless buying spree. The year saw record mutual fund inflows of over 9 lakh crore rupees, powered by strong SEEP contributions each month. The true stars of last year were the SME and unlisted markets. SME stocks were multi-baggers, with over 90 stocks delivering returns of more than 100%. Hundreds of companies raised capital with enormous oversubscription. The unlisted space saw enormous wealth creation, led by names like the Metropolitan Stock Exchange, which delivered an incredible return before its listing. Opportunities and Market Outlook 2025. India's long-term growth story remains compelling. It's powered by an enduring working-age population creating a virtuous cycle of growth, strong and consistent government support, and the vibrant rise of a startup culture. This powerful combination makes India a uniquely lucrative long-term investment opportunity. A major positive macro tailwind is the dramatic fall in Brent crude oil prices, down significantly from its peak. This sets in motion a powerful chain reaction. lower crude leads to lower inflation, which in turn allows central banks, including the RBI, to pursue lower interest rates. This supportive monetary environment is a key positive for this year. Some charts tell a powerful story. India's market capitalization to GDP ratio is at an all-time high, signaling strong market maturity and optimism. Simultaneously, corporate debt is at a multi-year low, indicating incredibly healthy balance sheets. And last year, India gained the most in market cap compared to other major economies, underscoring its standout performance. After the correction that began last September, Nifty valuations have cooled down significantly and are now back at their long-term average. This recalibration offers a much more reasonable entry point for investors compared to the elevated valuations seen earlier in the year. We are in the midst of multiple, powerful, multi-decadal themes that are set to create immense wealth. These include globalization through manufacturing and China Plus One, rising consumerism, the formalization of the economy, the clean energy transition, the financialization of savings, and the ongoing technology boom. These are not just themes, they are the bedrock of India's future growth. In summary, after a slowing trajectory in the first half of the last financial year, India's GDP growth is still projected to be robust for this financial year. This will be supported by better monetary conditions, improving corporate earnings, and strong government capex. This year could see the return of foreign institutional investors after their outflows last year, especially as the market realizes that potential new US policies could actually benefit India. Reform momentum is expected to continue. Valuations are at long-term averages, suggesting a year of consolidation as the world adjusts. Auto, select consumer discretionary, healthcare, and financials are poised to outperform. Key risks to watch: heightened geopolitical conflicts, irrational tariff wars, and currency volatility from new US trade policies. After the market correction that began last September, we've seen a significant cooling off in valuations. The Nifty has now pulled back to its long-term average valuation. This is a crucial recalibration, moving away from the expensive levels we saw earlier and offering a much more reasonable and attractive entry point for long-term investors seeking value. At Tikona Capital Finserv Private Limited, we believe in creating finite solutions in infinite possibilities. Our triangle logo represents filtering out unknowable edges from the ultimate circle of market uncertainty. Founded and led by Sumit Poddar, our team is committed to empowering customers to invest in high-quality businesses and build long-term wealth. Connect with us at tikonacapital.com, follow us on LinkedIn, YouTube, and Twitter. Thank you for watching, and remember, invest with conviction, build long-term wealth.